Good morning, traders. It is Wednesday, October 18th. We are about 1 hour before the open. A lot of you viewed the last video that I did on trade log analysis. I got a lot of really positive reviews on that. So I'm going to try and do a little bit more of that analysis in the future. Instead, what I'm going to be doing is I'm going to be taking actual trades that were posted in the chat room, and then I'll be analyzing each one of those probably about 2 hours after the open so that you can get a feel for the types of trades that our members are finding. I like to start each one of these videos off with a review of our last pick. META, Meta, was the last pick that I highlighted. And that video came out a week ago, and this is where I recorded the video. So before the open, that video was released, and you can see Meta actually had a really nice day that particular day. So if you're day trading, which I've really been advocating recently, you had a decent opportunity to trade it from the long side. I still like Meta. Earnings are coming up. If we hover over the E at the last bar here, we can see that earnings are coming up about a week from now. So we've got all the mega cap tech stocks getting ready to announce earnings. Typically, the market bid is strong before those major earnings announcements. If you take all the mega cap tech stocks and you add them together, 7 stocks or so comprise about 25% of the S&P 500. So very, very important earnings announcements coming up. As I'd said, the bid tends to strengthen into those earnings releases quite simply because who wants to short when you've got all of these tech monsters getting ready to report and when they have been leading the market higher? The answer is no one wants to short. So we should see pretty decent floor to the market until those earnings announcements. I'm going to go into a little bit of market analysis now. A little market analysis now. So if we take a look at the daily SPY chart, we can see that we've got the purple line is the 100-day moving average. The lighter blue line is the 50-day moving average. Then we've got the green line is AVWAP-Q. That's a support level. And then below that, we have the 200-day moving average. So what does all this mean? Well, from August through September and even into October, we've seen a little pullback in the market. Lots of fits and starts. So 2 steps down, 1 step back, 2 steps down, 1 step back. That stair-step type of process is leading us to a downward bias right now. But we are trapped between these 2 major moving averages. And then we've got the AVWAP-Q running right between them. The market is waiting for news. They're waiting for either the Fed to stop hiking rates, they're waiting for inflation to come in, they're waiting for good earnings announcements. The market lacks a driver right now, and we're going to get a lot of earnings starting right now. The one thing that I will also mention, and I've been trading for 30 years, this is a very, very powerful force not to be discounted. The market tends to rally into year end. So from August through most of October, the market has a seasonal bearish tone to it. But from October, the end of October, the last week specifically, into January, the market has a very bullish bias. Now, I'm not somebody who trades seasonality a lot, but I'll tell you that this force is super powerful. If you were short from August through October, you would do well generally. And if you were long from the last week in October through January, you're going to fare very well. So I like to have that seasonal factor working in my favor, and we're going to be shifting from seasonal bearishness to seasonal bullishness in about the next week or so. So I'm going to keep my trades flavored on that bullish side. Why? Pete, there's nothing really in the market that tells you that you should be bullish in here. And that's true. We have this downward bias right now. We're between these major moving averages, mixed overlapping candles. There's really not a lot going on here. My sentiment is that we're going to see a decent market bid into these mega cap tech earnings. That takes us to the end of October, which is when we start getting seasonally bullish. We also have the FOMC statement coming out November 1st. October 31st is when they meet, and November 1st. November 1st, we get the FOMC statement. That syncs up with major earnings, a Fed statement, and a seasonally bullish pattern. So how do I get really bullish? Well, I'm not looking for a gangbuster rally into year end. I also don't think that that's in the cards. Could we get back to the high of the year? Absolutely. Are we going to boom, 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 get back there right away? No. We're going to see the same type of stair-step process on the way up. So let's take a look at some stock picks here, and let's look at this downward sloping trend line. I'm going to put up our automated trend line so that we can see what's in play. This is a major trend line. So if we can get above the 100-day moving average, that's a big plus. If we can get through this downward sloping trend line, that's a big plus. So I would start getting progressively longer above the 100-day moving average. How do we want to break it? We don't want to poke at it. We want to blow through it with a long green candle and heavy volume, and that candle needs to close on its high. Then we're probably going to digest some of those gains and then get another push higher through this downward sloping trend line. If I see both of those, okay, now I can get fairly aggressive with my longs, and I'll know that that's the side that I want to favor. You can also see there's a horizontal support line that comes into play right around that 430 level on the SPY, so the market's been able to compress above that. That's what has me motivated to trade the long side. If I had to look at a longer term swing trade, then I would be looking to sell out of the money bullish put spreads on very strong stocks on the notion that I've got all these bullish factors that are going to be coming into play. I've bounced off of that 200-day moving average. I have a major longer term trend line coming into play right there at that 200-day moving average as well. This is all major support. I believe that that support is going to hold into year end. So I don't have to worry about the market rug getting pulled out from underneath me. And if I have very, very strong stocks with lots of underlying technical support levels, then I can sell those bullish put spreads below that technical support. And I can ride out some of this very choppy market behavior that we're seeing currently and let time premium decay work in my favor. So let's be watchful how the earnings releases come out. What are the earnings reactions like? And for that breakout above the 100-day and the 50-day moving average, then we compress a little bit and then we make another leg higher through this downward sloping trend line. That gets me more and more bullish, and that gets me more convinced that we are at least going to challenge the high of the year. So let's take a look at some longs and see what we've got that might possibly work out for us. ADBE, I'm going to go through my Green Royal Flush search. It's one of my favorite ones. This has a buy signal across multiple time frames. You can see our buy and sell signals are the green dots on a 5-minute, 30-minute, 1-hour daily basis. So we're looking for lots of green. So the time frame goes from shorter to longer, and I do the same thing with volume. So I want to see heavy volume on a 15-minute, 30-minute basis, and this is the relative volume for the day that we're currently trading. We're pre-open, so these are yesterday's numbers. Then I have relative strength on a 15-minute, 30-minute, and a D1 basis. So I'm looking for lots of green dots. I'm looking for lots of blue dots telling me that there's heavy volume. That tells us that there is institutional buying, institutional participation, and I'm looking for relative strength. So let's take a look at the first stock is Adobe. Can do a little bit of market analysis. I think I've got time right now to do this. So let me backtrack just a second and talk about the price action yesterday on the S&P 500. So we get this big gap down. And we have this long green bar right out of the open, and we have OneOp starting to test and cross over here as the market is going down. So what does this tell us? Well, we're not that interested in chasing gap and go patterns, and I write about this extensively in my articles that are posted to the OneOption website. It's only for members, but for those of you who are members, please make sure that you read all of those articles. There are lots and lots of gems hidden in there. So we get this big pullback here. We know that a gap and go is not our best probability. So we wait to see how aggressive the selling is as this bearish cycle completes. Well, we see the first candle of the day is a long green candle closing on its high. Then we get some overlapping candles in here. Yes, they are red, but you can see that they are very rangy. They're not red candles that close on their low. We see tails and wicks, so that tells us there's some uncertainty. Then we get this long green candle right here. And where did that come into play? Right on that bullish 1OP cross. Hallelujah, we're in the gap. This means we go higher. What type of volume did we have? Heavy volume. This is what we're looking for. This is a gap reversal. This is one of our best setups. So then we add another candle right to it and the rally is on. So we see nice opportunity to get long really strong stocks. Typically, if the market were in a strong uptrend on a D1 basis, and I've just shown you, we're trapped between two major moving averages. We've got mixed red and green candles day in and day out. We don't know what the market's going to do because it's trapped. We have no upward momentum in the market. If we had that type of trend in the market, then we could get more aggressive with longs because this is a major gap reversal on decent volume. Nice stacked green candles, but we don't have that. So we have to be more passive. Let's say that yesterday the market had broken through the 100-day moving average on big volume. Okay, that's the type of day when we can trade a gap reversal like this and actually get really aggressive with it because we've broken through major technical resistance. Perhaps we broke through a major trend line. Perhaps there was a jobs report that was released. Maybe it was an FOMC statement reaction. These are really big news items that would continue to fuel that rally. And then we would expect that this type of move is going to have small little pullbacks that are brief and shallow. And those pullbacks are going to give us an opportunity to add to positions when we make a new high and when we make a new high. We didn't have any of that yesterday. We are in a news vacuum. There's no major economic releases to really speak of that are market drivers. We have earnings coming out from major companies. So everybody's in wait and see mode and the market's trapped in a range. So when you see this type of rally that culminates with a bearish engulfing candle, okay, you need to be a little bit more careful than you would when the market is making a big D1 breakout. So then the price action starts to soften a bit, and you can see right around the time that we got that bearish engulfing candle, we also had a bearish 1OP cross. All right, you've got to tread a little bit more cautiously. Do you have to bail on your longs instantly? Well, you'd like to see this high from the previous day hold. That should be support. Was resistance, now support. You get this long red candle. Okay, that's kind of another warning sign. If you're trading stocks with relative strength, chances are they were preserving most of their gains, and during this little drop, they're still treading water near the high of the day. Well, once you start to see that this selling momentum is picking up steam and that we're starting to pull away from the high of the day quickly and with some organized red candles, that's when you start taking profits on your stock positions. And if you had entered them really late in the day, like right in here, you're still probably going to at least be able to scratch those trades. So you go to the sidelines and you figure, well, the market is trapped in this range. I can't tell from day to day what the market's going to do, so best to err on the side of caution. When this level is breached, okay, I'm out and I'll wait for my next opportunity. You could actually start trying some shorts up in here as well for stocks that have not participated in this bounce and that were already near their low of the day and below the prior day's low. When you see this type of price action, as soon as the market reverses, those stocks are going to crumble. So when the market's not trending, you can trade either side of the market. Just have to stick with stocks that are relatively strong or relatively weak, and you have to wait for your windows of opportunity. So let's shift gears. Let's go into some of the stocks that we're looking at, and I'm going to go back to Adobe, which is on the top of the list. Lots of green dots across the board, decent volume in here. I really like Adobe, and it's not going to be announcing earnings for about another month or so. So we are well out of that earnings range, and this sets us up for an opportunity to sell an out of the money bullish put spread. I like Adobe as a long. I like selling this 525, 520 bullish put spread that expires before the earnings announcement date. So if you can get $1 credit for a $5 spread, that is a nice return. Again, I can't emphasize this enough. You want to make sure that these credit spreads expire before the earnings announcement. Those options are going to retain their option implied volatility. So if they span that earnings announcement, you're not going to be able to make much money on it. You're not going to be able to take advantage of time decay or implied volatility decay because they're going to retain that value because you've got earnings coming up. So make sure that you sell those spreads before that expire before the earnings announcement. But yes, I like Adobe. I think that's going to be a really nice pick. And you've got major technical support. You have the 50-day moving average, and you've got that AVWAP-E that you can lean on. Take a look at some other stocks that are on the list. Meta was our pick from before. PXD had a nice breakout. They are going to be taken over by Exxon. This is a stock deal. So as PXD goes, Exxon goes. As Exxon goes, the price of oil goes. So I do like this breakout. Commodity stocks tend to be very choppy. This is a nice breakout. Wouldn't be necessarily my favorite play because you can see how choppy the price action is in the underlying stock. So if I'm trading it, I can day trade it, but for a longer term swing without a market trend, this stock could easily back right back off if the price of oil starts to drop. You see a lot of stocks in here that are from the energy sector. So in general, energy has been very strong. So let's take a look at another search that we've got here, and we're going to go into Pop Bull and see what might be coming up in that search. SMCI, November 8th is the earnings release date, the projected earnings release date. This is a fairly volatile stock. We do have some option expirations that we can lean on. The stock in general has been relatively strong recently. It's dipped just a little bit here. Decent volume yesterday on that up bar. These major support levels are holding. Here, I've got another major support level right there. Let's put up the automated trend lines. Let's take a look at those. So you've got a major support level. If you can sell a 240 or even better, a 230, 225 bullish put spread and bring in $1 for that expires before November 8th, I like that trade as long as this support level, which is well out of the money, is preserved. So that's another decent looking play right there. DLTR, I don't like buying stocks that are down in the lower right hand corner of the chart. However, this stock has put in a little bit of time and it has formed a small base and it is above that AVWAP-E, excuse me. So yes, I kind of like this for day trading because it's been so strong and it had good volume and it's starting to pick up relative strength, but I would not be swing trading this. This could be just a bounce. It's a retailer. There are many other retail stocks that look far stronger than DLTR. But yeah, I would day trade this. I would short-term trade this. In order to start trading it longer term from a swing perspective, that is a big drop. That is a sign of trouble. I would need to see a longer term base that forms over the course of maybe a couple of months or so, because each one of these little bounces like that could stall out and then wham, you get your next leg lower and what looked to be a beautiful bounce and a rebound. And this is where novice traders go wrong. They look at this and they go, oh my God, if this stock just gets back to $160, I'm going to make a lot of money. That's not the mentality you want to have, because if you look at many charts 6 months down the road, you would see that this turned out to be a bearish flag formation. There's your flagpole, a little bit of a bounce. Shorts that got short up in here decide that they want to take some profits. Those are huge profits. So they start buying some of the stock. These are not longer term investors who want to hold DLTR for a few years. These are just guys that are taking profits on a short position that's creating this little bit of a bounce. So the natural sellers who've been selling all in here come back and then blam, the bottom falls out of the stock. And now you're left holding the bag. Well, we don't want to do that. So we want to give this lots of opportunities to form a longer term base. And then when it starts moving through some of these longer term moving averages, which are starting to come back down to this range, okay, now we know that that stock is able to move through some resistance and we have a series of higher lows. Those are the signs that we need to look for. That's why we don't start buying dips on these stocks that have been in a very nasty downtrend. Need to give them time. Let's see if anything else sticks out as far as possible longs here. This is a nice breakout through horizontal resistance. We've got a downward sloping trend line here that's been breached to the upside. Stock is starting to pick up some relative strength. I think that my long of the day is going to be Adobe. I really like it. Now, I'm going to show you one other feature actually, because we've got earnings coming out and we want to be able to see what earnings releases are coming out. So in Option Stalker Pro, I'm going to click Market View. And then I'm going to select Pre-Earnings Options. And I'm going to expand this window. And I will have one other play for you to consider. These companies are going to be announcing earnings after the close today or before the open tomorrow. So today, this is your last chance to trade these stocks. The one thing that you're going to want to do into earnings season is there's another checkbox that we need to be mindful of. Earnings releases. And it's not just the earnings release for the company that you have a position in. You also have to look at tangent earnings plays. Yesterday, one of our members had mentioned that they took their gains on ALK, Alaska Air. Really smart move. Why? Because you can see AAL, American Airlines, is actually it was UAL that announced earnings today before the open. Well, that's an airline stock. Those results are going to affect ALK. Why take that overnight risk? So make sure that you're watching for peers that are announcing earnings, not just the company that you have a position in. Some companies are more closely related than other companies, so take that into account as well. So this shows us the companies that are going to be announcing after the close or before the open. And as I go through, you can see Tesla and Netflix. So we're going to take a look at both of these because they're major stocks. And you can also see the way that we use this pre-earnings options page is number one, it's a quick resource that you can use to see which companies are reporting and are there any peers that are reporting or are there any companies that I have a position in that are reporting. This is my chance to exit those positions and not to shoulder all of that risk. We can also take a look at what the expected move is. We can take a look at what the average move is. So we've calculated the average move over the last 12 quarters, the last 3 years. This is a good sampling. This tells us what we can expect. This can also show us the percentage of times that that expected move has been exceeded. So we've also tracked this for 12 years. So for those of you who are looking to sell premium into earnings announcements, it's not a strategy that I advocate. We do have a calendar spread strategy that we use successfully. What we're looking for is a big difference between the weekly options. So you see that this field is not populated here. Well, these stocks don't have good option liquidity and they don't have weekly options. But for those stocks that do have weekly options, we like selling this month's strike price and buying, we like selling this week's at the money options and buying next week's at the money options. Same strike price. And we're looking for that big differential here. It's a very successful trading strategy that was conceived by one of our members, Dave Wise. So he's been using this successfully for a number of years. So this is just another resource that you have within Option Stalker Pro, and I don't often talk about a lot of the features that we have available. I want to take a look at Tesla because I did see something that is interesting to me. We've got that earnings announcement, so we're going to find out after the close today how Tesla reacted. So I'm going to put in Tesla. We'll take a look at the daily chart, and then we'll see what has me interested in this particular earnings release. Well, we are in a wedge formation. You can see our automated trend lines. There's our downtrend line. There's our uptrend line. You can see the major moving averages converging right at this level along with the AVWAP-E. This stock is going to break out one way or the other. Now, the option premiums are very rich, so I would not advocate buying a straddle or buying a strangle. Wait for the earnings release. When we know the direction, know that this wedge formation is going to provide fuel to the upside for it to challenge its all-time high or recent high. I don't know if that's a 52-week high or an all-time high. It's well off of that all-time high. You can also see on a weekly chart, we've got this downward sloping trend line here that comes into play right about here on a weekly chart. That would be a significant breakout. And we also see that we have an upward sloping trend line on a weekly chart. We've got a wedge formation, a longer term wedge formation on a weekly basis. This stock is compressing in here. When it gets going one way or the other, it's likely to have follow through. So when you come in tomorrow morning, be very watchful of what Tesla is doing and know that these are your key price points. 270 on the upside, it's got a very good likelihood of continuing to follow through. If it breaks down below, let's say, this 250 level, then it's got a very good chance of coming down eventually and testing that 100-day moving average. So don't trade before the number, watch for the release, watch for the reaction, and then you've got a potential trade on either side. Let the stock play out, get a feel for what the market's doing, and then you might have an opportunity to get long Tesla on this breakout to the upside, or short it if it breaks down to the downside. That's all I've got for you today, folks. Good luck with your trading. We'll see you Sunday. I plan on doing another video.
Thank you for watching this YouTube video. I'm Pete Stolzers, and I'm going to keep the trade ideas coming along with lots of education, so make sure to subscribe to the channel and please turn on your notifications so that you never miss another trade. If you like the content, please give it a thumbs up. I've loaded 2 other videos that I think you're really going to enjoy. Stay tuned. We'll see you soon.